headier concepts with cash reconciliation terms and cash rec snapshots. This is going to be a decent amount to take in, so we'll buckle up. After that, we'll probably break for the day, and then on Friday's session, we'll do an admin overview. So understanding like the different types of controls you can institute to make sure people don't have access to things that they shouldn't. All right, so we have about an hour and a half to get through the rest of forecasting. So let me log back in. No questions before I go? Okay, so here's a scenario. Kaylee entered a bunch of forecasts and they all had a flow of ACH, but a lot of them don't have they all have a flow of wire, but a lot of them don't have a budget code. We said, oh shoot, look, there's 10 wires that I didn't put the budget code in. Maybe it didn't paste in correctly, whatever the reason. What can she do to fix this? Well, she could go into each one and select the appropriate budget code and save it. Then open the next one, select the appropriate budget code. Let's pretend it's all Clearsulting, so on and so forth. This is probably manageable for 10 or so, but remember, we got ergonomic mouses. We want to protect our hands. We don't want to be doing lots of manual work. Time is finite, et cetera, et cetera. So how can we change these in one batch change? Or shall I say batch modification? Well, there's a process called batch modification to serve that very purpose. So a batch modification can do lots of batch changes in either a manually driven process or a bulk automated process. So let's add a batch mod template and let's call this update budget code. Setup, as always, what are we setting up? Okay. We're doing this just for Kaylee's account, so let me just pick hers. The date range, let's just do the things that we created today. Easy enough. What are we updating? It's your forecasts. What are the flow codes? Let's just skip all this. Right, because we don't need to filter even further. And then modification. What do we want to modify? So what did I say we wanted to do? Do we want to update, copy, or delete?
Update.
Update. And then what do we want to update?
Budget codes.
And then what are we going to do?
New budget code.
Good. Let me save this. Saved it all the way through. I'm going to run it. And now it's showing me all the flows that met my parameters that I set before. So what were my parameters? Kaylee's account, anything created today, that's an estimated or confirmed forecast. Now I could have even drilled in further. I could have said budget code. Show me the flows without a budget code, because those are really the ones we want to target. And now look, all my wires that lack a budget code. Make sense so far? Sorry, I can't see all your faces. That was a
makes
great,
sense.
excellent, thank you. So now, which ones do I want to change? 1, 2, 3, all of them? Yes, all of them. So I could either click this top button, best practice for sure, or you can click one, hold shift, click the bottom, and then they all select. Good little tip to have in your back pocket. What I'm going to do now, button on the top right, set new values. It's going to remind us what we're doing. You're updating the budget code with clear. And now I'm going to click go and everything's going to disappear. Why did everything disappear?
Because there's no missing budget cuts now.
Very good. So if I change that little template parameter to say all, very astute, Josh, good stuff. Here are my Clearsulting flows. So how easy was that? Batch mods we use all the time because they're just so nimble and they do so much heavy lifting for us in a matter of seconds. So if you can get familiar with the batch mod template, I remember 2 days ago I said Kyriba is a template-centric system, and if you understand templates, you understand like 70% of Kyriba. You see what I mean? Like everything we do is a template. Templates look like this. Once you understand how to manipulate a template to narrow your data, you could do a whole lot of things with it via batch mods. What else could we possibly do? We could delete data. So Kaylee loaded a bunch of Clearsulting confirmed forecasts and said, oh shoot, I didn't actually want to do that. Maybe it was just the ones that were ACH wrong. So I can pivot here, just delete these. And it'll say, hey, do you want to delete these? We'll say go. I won't delete it since we worked hard on these. You could also copy them. There's ever a reason for that. There are sometimes reasons for that. We don't need to get into it right now. And other things we could do, update account, flow code. You could change the flow status if you loaded everything as a confirmed forecast and you wanted it to be estimated. You could do that here. Okay. And you could see, you could also change amounts, descriptions, etc. So why don't we just all make sure we're good with this? We all have ACH ones, right?
Maybe.
Or we all have minus wires. Let's
Yeah.
say.
Yeah.
Can you make those minus? Let's do minus invest. And just give me a holler when we're done. Could you all actually change the transaction date as well? To make it Christmas 12/25/22.
For all of them or just the minus wire that we're changing?
Just the ones that you're changing, yeah.
Okay.
Thanks.
I see update the date in the one.
The budget code investment deals.
For the period, then would you put the 25th for start date?
Okay, so I thought I had mine, but I don't see it updating in the forecast created today. You're on mute, Kevin.
Yeah.
Did you make sure to click set new values when you ran your batch mod?
Maybe not.
All you fell for it? Saw a bunch of nods. You want to share, Kaylee, and just
Yep.
underscore that real quick?
Okay. So under oh, whoops. Wait, how do I edit? Update? What was that under?
So click go. Oh, you're not seeing them anymore?
Mm. Oh,
Yeah, but you have to select them first. So update your template. Pencil.
oh, yep.
Okay. Sorry, you went back now, so you're out of the batch mod. It's okay.
Sorry.
Process batch mod. You're fine. Try to resist that back button.
Yeah.
It's just takes you too far back. Okay, so what are we trying to do? Can you just talk me through your tabs?
Yeah, so I want to filter by my accounts.
Hmm.
So I have this account. This was the period that they're
Sure.
through. And then
Okay,
I'm
good.
only looking at forecasts, all flow codes, but I want to look at the budget codes with wire.
Okay.
I don't know what that is.
That's the, if you want to select by amount.
Okay, right. Presentation. And then, do I not do
Right.
this here?
Try doing budget code all. Because I think your flow code was wire, but your budget code was probably something else. Now go to the budget code tab for a minute
Oh,
and select all instead of single.
oh,
Click go.
okay. Click
Try
go.
that. Yeah.
Wait, do I
Mhm.
need it?
No,
I
it's
do the-
fine. It doesn't even matter because you're
Okay.
gonna get a second chance to update it. Okay. And then from there, which ones do you want to update?
These.
Okay.
So, okay.
So you see your flow code was minus wire
Yes.
budget. So that's why
Yeah.
I went. So now
Okay.
set new values is the key button. And then you can
Okay.
check that budget box. Yep. Very
And
good.
then the date. It's the transaction date or the value date.
Transaction, please.
And set it manually.
Yep.
Okay. Is that it? I think so. I don't save it anywhere. I just press go.
Yep.
Okay, they're still there though.
But that's your flow code.
Oh, okay. Okay. Oh, so then I can look at them
Scroll to the right.
individually.
You can scroll
Oh,
through,
I see.
but your date didn't update actually.
Yeah. Oh, because it's a value date. And I changed the transaction.
Doesn't look like that took either.
Oh, okay, good. Wait, it's not this one. It's
Am I supposed to have all the ones that I'm stacked on? That is actually.
Wait.
Click the pencil,
Okay.
click the budget code,
Yeah, so you're not.
select all, save it, and then go. Pivot on the budget code column.
Is that okay? Is that something that's like still in discussion or is it
oops.
operating as it's intended and that's okay? That's operating as it's intended, but I couldn't, because I feel.
Select the investments.
Not the project manager, but
Go
I.
down.
Yeah, I want to be like reviewed.
Set new values, please.
Oh, okay.
And then attributes, scroll down. Did you check the transaction date button?
No, I did not.
That's what'll do it to you.
Okay.
And make sure you select manual, select it manually.
Okay. And
When
do I
you're-
need to change the value date too or just transaction?
You could change it, but it's fine either way.
Okay.
But make sure you do 12/25 and 2022.
Yep.
How's everyone else doing here?
I was running into the same issues as Kaylee. So, where like everything worked except the date.
Did you check that box? Let's see it now. Hold on, Kaylee. Before you leave, can you just click
Oh,
on the
sorry.
investments button?
Yep.
You're okay.
1 second. Okay. Investments.
Yep. There you go. There's your date.
Okay. Nice. Okay.
Okay.
Thank you.
Yeah, it worked for me too.
Sorry, what was that?
Yeah, it worked for me too. I just forgot to select transaction date.
Awesome. Josh, Olivia, how'd it go? Thumbs up. Any issues, Olivia? Sorry, Olivia, if you spoke, I couldn't hear
Say it
you.
again. I just unmuted.
Oh, sorry. Yeah, I think I got it.
Okay. Do you want to show? It looks like
Yeah, sorry, 1 second. Let me.
Uh-huh.
Do you want to mute your computer?
Yeah.
Okay, so I did, where were we? Yeah, I did the budget, investment, transaction date.
Click on the box to drop down, copy the accounting against first one.
Which one?
First one.
Oh, this one.
No, second. Sorry, second. That'd be manual.
Oh,
And you set the box below it. You got to put the box above the 19th. Got to go 25th.
Hmm?
19. That's right next to it. You just change this to the date manually on the transaction date. So you got to change it to the right of it. The 19. What 19?
change it to the 25th.
Yeah.
Do they both need to be the 25th then?
I think you're fine either way.
Okay. And then did we need to have anything in here then, or no?
only if you want to narrow down your results.
You get to your volume up.
Sorry, I couldn't hear you.
Sure, only if you want to filter by budget code. It's not necessary.
Okay. So then.
Top left box next to account.
Where?
It's like in the black.
Oh, this one.
Good. Set new values.
Where's that? Oh, there.
Go. There you go. So the transaction date's changed to
Yeah.
Yeah. Which is good. I think. Feel like are we good?
I don't know.
All right. Are you asking if it looks good?
Yeah.
Transaction date looks right. What else did you want to update? Looks good. So now you've successfully modified the date and budget code for a series of forecasts. That was the goal. Michael, you good? All righty. Great. So let's move on then. So the next things we're going to discuss are called cash reconciliation terms. So we talked a little bit about the idea of reconciliation, meaning we count a transaction towards our balance, right? Reconciled was that status that means push it into the cash module. Neutralized was the status meaning withhold it from the cash module. There's also, when we run that auto rec process that does that push or pull, there's some logic that helps the system know what transactions to actually push into our cache module. And this logic also helps us understand when a forecast and an actually match. So that's the other way we mean the other way we mean reconcile. So reconcile in kind of the bank world, in the bank module, means counts, right? Counts towards cash balance. Remember that from last time? But somewhat confusingly, reconcile in the cache module can also mean matching a forecast to an actual. So for instance, you guys put in some confirmed forecast that said this amount of money was leaving our account on this day. Here's the flow code, here's the budget code, here's a description. Ultimately, that transaction is going to happen, right? It's confirmed. There's no ambiguity that's going to occur. So do we want that forecast to just sit in the system forever? What would the ideal be? No, we don't want it to just sit there forever. When is a forecast no longer helpful?
When the time has passed?
When the time has passed, absolutely. And when the forecast comes to fruition, right? Like when you pay your cell phone bill, you know you're going to pay $150, let's just say on the 25th, right? So you can kind of jot that down as like a mental note. You can put it on a piece of paper, you can put it in a planning app. And then once that $150 transaction occurs, you don't really need that scrap of paper or that mental note anymore. Transaction occurred, right? The thing you planned for happened. So what the system does when that event happens, when a forecast and an actual match, it actually merges the records. So the current forecast merges into the actual record. And this is what we mean by reconcile. Think about your cash position worksheet. On the 19th, today we're saying 1.02, let's just say $200 in wire, $200 in wires. As soon as this $200 wire comes in, the system is going to, or comes in off the bank statement, the system is going to say, look, it's the same account, the same flow code, the same date, value date, and the same amount as the forecast. Therefore, we found a match. So what it will do, it will just take this record and kind of absorb it into the actual record. Why is that a good thing? Why would we not want the system to just create a new cash record, totally separate, call it plus wire, actual $200? Why would we not want it to do this and keep both?
Double count.
Exactly, because now if we go back to our worksheet, now we still have that $200 showing up here, but we also have $200 showing up here. So it looks like to a cash manager that we have $400 in actual and pending transfers. So we need it to supersede, replace, merge, whatever word you want to use, the forecast when there's a match. Does that make sense so far? Okay, good. So through what logic does the system determine there's a match, right? How does the system know to say, okay, we're 100% confident that this forecast and actual are the same, we're talking about the same transaction. All that is done through setup, cash reconciliation term. Now, before we even get into the specifics of cash rec terms, let's just talk about what ordinarily constitutes a match in Kyriba. So there are 4 criteria. Has to be the same account, amount, same flow code, same value date. So if you have an let's say you have a confirmed forecast. And an actual. If they're both KS account. They both come from KS account. They're both $200. They're both minus wire. They're both dated for 1/19. The system will say, great, you have a match. This record is absorbed into this record. Okay? And that's what we call reconciliation. You'll absolutely need to know that these are the 4 default characteristics that the system uses to determine cash rec. Clear so far?
So if our forecast is off, like we estimate $50 over, will it not reconcile that?
Not unless we tell it to. Great question. So we'll get to that in a minute. Very good. Excellent thought. So how do we build in those discrepancies, right, to account for close to a match? Perfect. So when a flow reconciles, we're going to come back to this logic in just 1 second. When a flow reconciles, just going to take this one for example. There's this little historic button on every cash flow. And if your cash flows reconcile on top of each other, you can click historic and you'll see how the flow evolved from a forecast to an intraday and then ultimately to an actual. All these things should reconcile with one another. So sometimes you'll see it started as an estimated forecast, just so happen to match with your intraday transaction. And then an intraday should always reconcile with an actual. Why? Why should these always reconcile? Sorry?
They have to balance.
Probably right, but I'm not sure I'm totally following. So today my intraday statement said I made $100 wire out. Okay. Tomorrow my prior day is going to say, hey, yesterday you made $100 wire out. It's the same transaction. It just comes on 2 different statements. One comes from today. The other one comes from today and shows me yesterday's information. So the same transaction should reconcile because it's the same transaction, right? There's no room for differentiation there. So unlike Michael's point, where it's like, oh, you're 50 cents off. Well, you can't be 50 cents off between an intraday and an actual because it's the same exact transaction. It's just reported on 2 different days. Does that make sense? Okay, cool. So what is the logic that allows for forecasts and actuals to reconcile, and then also for us to stop any summary codes from entering our cash module? So we could build out terms either on the end of day for end of day statements or intraday. We can't do them both at once. So let's just build out a term for our end of day statements. Okay. The first thing we do is define our if statement. So let's build a rule called if ACH. So if the bank statement, this top bar is all about the bank statement. It doesn't say it, so it can be a little confusing. If the bank statement has cash flows called minus ACH, what should the system do? That's the way you have to think about cash rec terms. Think of it in terms of a question. It becomes a lot easier. If it's ACH, what should it do? Notice you can also add other things. Like you could say if it's ACH and JPM, but we don't need to get into all these like different variables, right? So you see here we have 4 options. If it's ACH, do we want to neutralize? Do we want to freeze? No, absolutely not. Why? Why would we not want to freeze an ACH? I can't hear you guys, sorry.
That's a payment against our cash that we need to count.
Absolutely, it's a transaction, right? It's a transaction and that has to count towards our balance. If we did a rule for minus summary, then we'd want to select neutralize, because neutralize means do not count this towards our cash module. If you remember, we already set up the summary flow code to never count towards our balance anyway. You can kind of stop these flows in their tracks in various spots, but this is like the last line of defense before flow code starts counting towards your cash balance. Okay, So neutralize only used for summaries. Good. Let's go back to ACH. So we don't want to neutralize. What else can we tell the system to do when it sees ACHs from the bank statement? The second thing the system can do, and it's not something that's used all too widely, but it would be used sometimes for ACHs, is to aggregate. So if we want to see, some companies, they have hundreds of thousands of ACH payments, sometimes in a single day. To go back to MetLife, they had a file that contained over 100,000 ACHs that they loaded every month in Kyriba. They do not want to see every single ACH line item in the cash position worksheet because it would actually just crash the system. Instead, they got all the ACH detail from the bank and they said, just give me one cash flow that aggregated all those ACHs into just one lump sum. That was how they wanted to do business. Totally fine. Because it's still counting towards our cash position worksheet, and it's just not, and our calculated balance, it's just not overwhelming us with information that we don't really need at that granular of a level. Should you want to aggregate transactions, you could see there's this little pane at the bottom that opens up. And then we have some decisions. Do we want to aggregate all ACHs? Do we want to aggregate them under a floor? So meaning for any ACH under 10 bucks, just combine them all. Don't show me 250 1-cent ACH payments. But anything above, it's a little bit more material and we want to see. Or maybe that threshold's 1,000 or 2,000, right? So there's flexibility there. And then you could also add customized criteria, which is actually brand new. You'll never get tested on that. So that's an option to aggregate. Does that make sense? So we're controlling what cash records come into the system and how they'll look through these boxes, right? This one doesn't come in at all. This one would be aggregated by some kind of logic. We can choose to aggregate, and then we can build some reconciliation criteria. So first aggregate and then reconcile against the forecast. That's not used all too often, so let's just skip aggregate for now. These do work in sequence though. So if you check both of these on, first, and the test will absolutely ask you this, first the system's going to aggregate all your ACHs, then it's going to take that lump sum, and it's going to try to reconcile the lump to the forecast that you have, okay? Let's pretend that we're not aggregating. So now we're telling the system, okay, minus ACH, we want to reconcile or attempt to reconcile the bank transaction called minus ACH with our forecasts, presumably called minus ACH. So we check this box and then this all opens up for us. If it's unchecked, notice everything gets grayed out. See, I can't click. So we're activating this pane by checking this box. Okay. There is a ton to talk through here, so we'll try to keep this relatively high level. Reconciliation method. This is what we just talked about before. How do we want the system to try to find a match? By amount and date would mean these 4 characteristics apply. You can also do reconcile by reference, which is very important for checks. Because if you are a client that issues 7,000 checks a day, chances are the account amount, code, and date are going to be the same, right? Like let's say, you have 5 $200 checks. How is the system going to know which one is which, right? How do you reconcile checks? What's the key field that you use?
Checking number?
Yeah, check number. And where does the check number populate on the bank statement? That's right, the reference. So if we were building out rules for checks, we'd probably build a very specific reconciliation term that says for checks, don't just reconcile by amount and date, that's insufficient, reconcile by reference. So our reference would have to match the bank's reference for it to match. Make sense? ACH, back to our standard amount and date. These are, we never really use these. Decrement means like you have a very large forecast, let's say it's $1 million for ACHs. And as the ACH payments come in, you start chipping away at that forecast. So you start at $1 million and then you get 250,000 on the intraday. So then your forecast is going to go down to 750 remaining. And you just keep decreasing, decrement, like decrease, keep decreasing until that your forecast is fully expended. Not used widely. You could also say aggregate forecasts. So let's say the bank reports an ACH in one lump sum. They say you spent $1 million, but we actually have the detail, right? We have $100,000 ACH forecasts. We could tell the system, before you try to reconcile, count up our forecasts and then try to match that lump sum that we have in the cash module to the lump sum that came in the bank module. Head exploding yet? This will be recorded, so we'll be okay. Let's stick to the most common use case here. So matching by amount and date, we could tell the system when you create that cash flow, what information do we want to actually preserve in the cash module? So like the description and the complementary info, remember that was really rich, right? That's where we have the full description from the bank. That's where we saw Clearsulting's name, all that other stuff. So this is very useful. We definitely want to retain this. We also want to we'll retain the currency. That's usually not controversial. We want to retain the values that we mapped in our bank mapping rules. So all these boxes should be retained, should be clicked. And then we probably want to keep the bank reference as well. So this is a standard setup. Pretty much give me everything that the bank is giving me. Sometimes you could say, you know what, don't give me the bank reference and we'll keep the cash forecast reference, but this is standard. Okay. Now, Michael's excellent question. We talked about how these are the 4 criteria that allow for reconciliation. Happens when our confirmed forecast said, or let's say the payment got delayed. Let's say we sent the payment and we missed the bank's cutoff time. Now what? Will these reconcile? No, they will not. No reconciliation. What a shame. So what do we do to allow us some buffer, right? Some discrepancy to allow for reconciliation? Well, first thing right here, we can build in some discrepancy base. So we could tell the system, give us a 3-day window, basically. If our forecast is 1 day too early or 1 day too late, match the forecast and actual anyway. Okay, this is pretty standard to allow for early or late payments that might not have been reflected on the forecast. So with a discrepancy day window, this will now be reconcilable, which is great. Similarly, what happens if there were bank fees here that we incurred to receive that wire? So maybe this became like 200, let's say 220, right? How do we allow for that? Let me give a more realistic example. You're probably not getting wired $200. Do that right? Good. How do we account for this? Well, we could just look down this list. Amount discrepancy. We have 2 options here. We can either say, give me a discrepancy of 20 bucks. So if I'm ever within $20, it will reconcile. Kind of like leniency, right? So in this case, this one will reconcile. That'll be great. Or we could say, let's set our discrepancies by percent and say if I'm within 1% of a difference, we can reconcile. Which one would you say is more commonly used and why? Amount or percentage?
Percentage,
Yep. And why is that?
just because the amount can vary widely, and so a percentage would probably be more accurate across the board.
Exactly. Because if we had a $20 wire, this could reconcile with pretty much anything, right? And that would be like 100% difference. A $20 wire would reconcile with a $40 wire, whereas percentage, only a $20 wire would reconcile with a $22 wire or $20.20 wire. Good. And then lastly, one of the criteria was flow code. So maybe the flow code for some reason didn't get mapped right. Maybe our actual just got mapped to minus 495, right? Or maybe we have something else, like maybe this would get mapped to FX because it was some kind of FX deal that we wired funds out of the system to pay off some kind of foreign exchange deal, or it had to do with an investment, right? Maybe it tells us why we paid it. Whatever the event, you can build discrepancy codes that says, okay, if my flow is minus ACH, reconcile with my forecast if it's minus ACH or minus debt, minus fee, minus FX, minus interest. So you could have a forecast. Just keep with the ACH. You have one called minus debt. You have this one, minus ACH. They could be exactly the same. They won't reconcile because they have different flow codes, right? All these criteria have to match. So what we do essentially in the cash rec term is we'd say minus that or minus FX or etc. So that or comes to play right here. This is where we set up those other codes that would be acceptable. Now we wouldn't do something like minus wire because an ACH can never be confused with a wire, right? They're totally different payments. So that would be bad. We wouldn't want to set a discrepancy like that. But maybe our forecast was categorized. We knew it was going to be an ACH payment, but we just were a little bit more specific here about why. And we still want that to reconcile. So a cash manager says to me, well, I really want good reconciliation results. That's one of the reasons we're getting Kyriba. So why don't I do something like this to make sure we can report that our reconciliation results improved 30% within our first month of using the system? How can you poke holes in that? I mean, it's pretty great. I'm giving myself a 19-day window, 5% discrepancy.
Might over reconciliate.
Falsely reconcile, right?
Yeah.
You're going to match things that shouldn't be matched, and it's going to be a real headache to understand what actually occurred that we planned for, what didn't occur that we planned for, what occurred that we didn't plan for, right? That defeats the purpose. So we have to be judicious about how we set these discrepancies. So something like this is appropriate. Any higher becomes pretty dicey. Questions? Told you guys it's going to be it's a little bit of a lot, but that's okay. Last piece, we should always check reconcile unless we absolutely don't want to reconcile, but there's really not a good use case for that. And the other standard setup is to say create. So if an ACH came off the bank statement and we didn't forecast it, so it couldn't reconcile with a forecast, it couldn't merge those records, then what should the system do? Like, let's say this, oops. This came in off the bank statement. We did not have a forecast for it, so there was nothing to reconcile. Now what? Should the system just say like, oh, well, forget about that 200K? So reconciling is great, right? It's great when these two records merge and we forecast it appropriately. But if we didn't forecast, we still need to know this thing happened, right? In the cash module. Otherwise, we won't have an accurate balance builder, right? Pretty simple. Nothing controversial about that. So what we tell the system to do, if it doesn't reconcile, remember these go down in order, create a cash flow representing that transaction. If you don't check this on, the system is going to put that transaction on hold, meaning it's going to kind of sit in limbo between the bank and cash modules until somebody physically pushes it. So typically, and we'll talk about that pushing in a little bit, typically you just check this on. So give it your best shot, Kyriba, to reconcile, but if not, count my transaction so I have an accurate understanding of what's in my account or what left my account. How does it create transactions? Well, that opens up this box, weirdly put in the middle, even though it comes at the end. I didn't design it. Just so when do we want to create transactions? You could say create always. So if we didn't reconcile, just create a record. Or you could say if it's under $10 million, create it automatically. Why would we ever want to do something like this? It's actually a really good use case for something like this, even though most clients don't use it. Only create if the payment is under or the inflow is under 10 million. I don't know about you guys, but if I'm moving $10 million, I sure would want to know about it ahead of time. I sure wouldn't want to be like, oh, that $10 million bill, lost it, right? Tough luck. Presumably, any competent cash management team should be forecasting for transactions that occur over, what is that, 8 figures? So if that does not reconcile, we better know what happened, right? So this can flag it by setting a threshold. So that this transaction, let's say it's 20 million, the 20 million goes on hold for somebody to investigate and determine why they failed to forecast. Maybe they overpaid, maybe they underpaid. Something should have happened though to tell us why we didn't know about that money. So that's a good use case for this. Traditionally, clients just say, if it doesn't reconcile, just create a cash record. And that's the end. We also check these boxes. This is standard setup. Sorry, it's this. Okay, so all the information that we mapped in the bank module trickles down into the cash module. Phew, that's cash rec terms.
Ooh. Good shit.
So sorry, was that a question?
No.
Cool. So you could build cash rec terms for individual flows, like summaries. You could see we have one where we're just saying neutralize those, and that's the end. You could build it, as I mentioned, like a more granular way, like an account plus a flow. You always need the flow. Or you could build catch-all rules. So this is ordinarily my cash rec behavior is as follows. First, try to reconcile the flow, then create the flow. And as I said, that's standard setup. If a client is only getting end of day statements, you would have half the rules that you would have for prior day statements. I'm sorry. If a client is only getting end of day statements, you would have half the rules. If a client were getting current day statements, why would you have more rules if you're getting current and prior day? Or less rules if you're only getting prior day? If a client is getting both current and end of day bank files, they'll have more rules than they would if they only received prior day files. Why is that?
Because they have more transactions coming through.
Not quite. I mean, yes, they do. That's not the reason for more rules. Your rules are built for a statement type. So we build rules so that say this is the behavior for intraday statements. So we build the global behavior for how intradays reconcile. And then we build the global behavior for how prior day transactions reconcile. If you only did one, well, then there's no reconciliation criteria for the other. And then the system's gonna bug out a little bit. If you were only getting end of days, you wouldn't need any of these rules because they're just never going to apply, right? They're not pertinent. Okay. Very good. Any questions, or is that a trillion% clear? We never need to talk about it again. No problem. As long as we understand that when autorec runs, this process is calling the logic of your cash reconciliation terms to figure out, one, should we neutralize? Two, should we aggregate? Three, should we reconcile? And or four, should we create that transaction? Then we're in a pretty good shape. Other important things to note are the discrepancy terms that we reviewed and the four main criteria that dictate a match or reconciliation. There's one other piece of reconciliation that we should just acknowledge, not widely used. Remember how I said if reconcile and if create is not checked on and it's just reconcile, then the system is going to put the transaction on hold if it doesn't match, right? We're telling the system don't create it if you didn't reconcile it. So what happens and what does on hold even mean? On hold is an actual status in Kyriba, and it would actually wait not for automatic reconciliation because we tried to automatically push it in to the cash module, but we told it not to create a transaction. You'd actually then have to go to manual reconciliation. And this template is going to show us, there's nothing here and it's fine. It's going to show us all the flows that are on hold from the bank module. And then we can either try to match it up manually to a forecast, or we can analyze it, make sure it makes sense, it wasn't fraud, and then we could just create a cash flow to acknowledge that that money actually came in, actually went out. But it is a manual process and it's only really done sparingly. I've only had to set it up for 2 clients across all my clients, so not super important, but just want to acknowledge if you don't select create automatically, then you're dealing with on hold transactions and manual reconciliation. It will be on your test. It will be in the guides that you read. There's more about that we can talk to, but for now, that's sufficient. All right. Great. Cash rack terms. What a blast. Okay. Last piece that I want to discuss with regards to forecasting. So we talked about forecasts matching to actuals, intradays or actuals. We called that reconciliation. And we also said that, it's a good thing when flows reconcile, right? It shows that we did a good job forecasting. And one thing clients typically struggle with is the efficacy of their forecasting. Are they doing a good job, basically, right? they don't know, and they don't have any metrics to show whether or not they have a pretty good understanding, usually because they're just too darn busy trying to get through the day to day. They don't have time to reflect and say, how well do we position cash for the day? Unless there are serious issues where they're like desperately borrowing money at horrible rates. So the system will relieve clients of that burden and produce a report called the snapshot variance report. Now, this report is kind of what it sounds like. It's going to take a picture of your forecasts, and then we can hold that snapshot of your forecast. Think of it like we took a picture of all the forecasts you guys created today, and then in a week, we can run a report that says compare this forecast next to what actually happened, since we have all the results from the bank, and show me where we were accurate and show me where we weren't. So it's comparing forecast to actual. Okay. So there are two steps here. First, we have to say, take a snapshot of my forecasts. Later on, evaluate the accuracy of my forecasts. How? By comparing what actually happened to what we thought would happen. Conceptually, does that make sense? Okay, so how the heck do we do that? Let's talk about it. So in the cash module, there's something called process, creation of a position snapshot. You can run a daily snap, you can run a weekly snap, you can run whatever you want. Traditionally, it's a daily snapshot that runs after we add all our forecasts for the day, say like 10 a.m. Or 9 a.m. That will preserve all the forecasts for a given period of time. So let's just say 119 through, what do we do, through 131 before? We had some data there. So if I said save and then I said go, all we're doing is saying, let's actually use our accounts too. All we're doing is saying, for our accounts, take a picture, preserve, right? Like memorialize all the forecasts that we, or all the data really, that's tied to these accounts for this time period. So in 2 months, we can come back and see if these were real accounts, of course. We predicted a bunch of activity to happen between the 19th and the 31st. What actually did happen? I click go. Not all too much happens. I refresh my task monitor bar. Nothing there either. There we go. It says creation of a position snapshot. Start it and end it. Wonderful. It's complete. Great. We did it. Just kidding. Now we can go to maintain position snapshot and we can actually see that we just took a picture of our data. Not much to see here either. You can see I just did it twice. Let me delete the one I just did. All this is saying is we created a snapshot on the 19th at this time. Here's the data that starts. Here's where we start from in terms of like capturing or preserving that data. Here's where we end. Okay. And now that we saved this data, we can run a report at a later time, but we'll run it now anyway. In cash periodic, snapshot variances by period. Let me add one for you. So let's use our account group. And now the data tab. This is going to look a little different from what we've seen previously on templates, but the breakdown is going to make a lot of sense. So first, if we're comparing snapshot to actuals, right, left to right, snapshot side can be data set 1. And we can even name it. snapshot, or we can even call it like forecasts. So what should we include from our snapshot? Our snapshot took a picture of everything for our accounts. We only want the forecasts, right? What's the data source? Well, we just took that picture, so let's use it. Okay, now we have the snapshot we took. And what are we going to compare that against? Hypothetically, imagining this is later time. Actuals. We'll call this actuals. What's our data source? Not a snapshot, right? Just what happened, right? Use the current position. Again, what we thought would happen, data set 1. What did happen, data set 2. Okay. Period. Now we're saying, what period are we analyzing? Well, our snapshot is only through from 119 through 131. So therefore, this data, we also don't want to change the date range. So 119 through 131. Perfect. Flow codes, you could say, you know what, I'm really only interested in how well we're forecasting for wires. So you could just run this for wires. Or you could say, show me everything. For now, we'll see everything. There's not going to be much to see. It's okay. And then we can structure the report. This is fine. To different presentation. We don't need to get into all this. It's too dry for an end of day conversation. Let's run this thing and see what we got. All right, fantastic. So for our class of 2022, you could see on 119, we forecast it for $200 in payments to Clearsulting. $1,610,000 investment payments, and these did not have a budget code. We can actually run this report to show budget code or flow code. I had it set for budget. I'll show you where that is really, really quickly. See? So let's just call this empty. You know that like shrug face that you can type in? That's basically it. So these were our forecasts. We forecasted for a total of 2.629 million. What actually happened? 200 bucks. So if you were a cash manager and you presented that to your boss, you can you should print it in pink because you're probably getting fired, right? You were $2.629,600 off the mark. So what this report shows us is that we had a huge variance, right? But also this report is super useful because maybe imagine if we did get this spot on and even this was spot on, right? Well, let's go to the next one. Imagine our wires for the day were spot on. Our Clearsulting payments were like way off. That would tell us, hey, we're really good at tracking short-term wires, perhaps, but we're terrible at estimating contractor expenses. That's where we need to improve. So this is a scorecard, right? To allow you to measure constantly in an evolving way the effectiveness of your forecasting. And that's why getting this data tagged so in such like a rich and descriptive way is so meaningful throughout the system, right? Because it's not just a cash position worksheet. It allows you to travel this all the way downstream into a report like this, where you can then compare forecast to actual and see where your deficiencies really lie. Questions? Okay. How we doing, team? How's the saturation level for the day?
Yeah, that was a lot.
I know. Well, good news. You have tomorrow, from Bootcamp perspective, off. You guys have access to these recordings. You have access to each other. You're gonna have to just please continue to put in the work to try to retain this stuff. See what makes sense. See what doesn't. I'm here as a resource. The whole team's here as a resource. We just want to make sure that this stuff is crystal clear. So when you go into the training from Kyriba, you guys are going to be rock stars. Everything they tell you is just going to be like, oh, I know this already, no problem. You'll ask meaningful questions. You'll bolster Clearsulting's reputation because we'll have 4 razor sharp analysts, just like knocking it out of the park. So that's, it's all very important over the next few weeks to really invest in yourself, so you can start hitting your utilization target as soon as you're certified. Super. 10 minutes left. Questions? Recap?
So objective tomorrow will be to keep compiling like the finance information from that textbook site. I forgot what it was called, AFP maybe, and work on Kyriba.
Yeah. So you can use your time as you see fit. Any kind of internal call, make sure you join. I don't know if we have anything scheduled for tomorrow. We have the portfolio tomorrow. It's good just to be a fly on the wall for that. I know it doesn't make sense right now. Let me stop the recording. No, it doesn't make sense right now. Everyone's using a bunch of acronyms and jargon.